In today's video, I want to discuss with you some of really the only Bitcoin charts that you need if you're a long-term investor. There's a lot of day-to-day noise, and look, on this channel, we talk about that noise. We talk about some of the things that are happening, short-term price catalyst things to be aware of in the market so you don't get shaken out by all the fear going around in the market. But as an investor, it's important to revisit what it is you're actually investing in, right? Make sure that you're seeing the forest and not just the trees in front of you. So in today's video, I'm going to be breaking down some of the most important charts that you as an investor need to understand when investing in Bitcoin. My name's Lark. Every day I make videos talking about cryptocurrency investing. Most days. Anyway, so if that's a topic that you would like to learn some more about, make sure you subscribe to the channel, gently tap on the thumbs up button for the YouTube algorithm, and of course, click on the notification bell to know when I put out a new video. So let's just go ahead and get straight into this topic. Time for your dose of hopium. Always good to get a bit of hopium in. Makes you feel good in the morning and good in the evening. Good old hopium, man. Now, let's talk about the first chart. This is about Bitcoin ETFs. So you can see here the first gold ETF was launched in the USA here, right here. Over the next 7 years, that gold ETF launching kicked off a mega rally for gold. One that saw the price of gold go up by 363%. Now here's the interesting thing. If you were to roll that back to the first gold ETF ever being approved, that was back in 2003, and it was actually an Australian ETF product that was approved. So much like we're seeing right now with Bitcoin, we actually saw smaller markets approve the ETFs first. In the case of gold, Australia did it first, and then the US did it. In the case of Bitcoin, Canada did it first, then Brazil did it. Australia, again, might actually beat the USA to launching a Bitcoin ETF, and then the USA will do it. Right now, there's 13 Bitcoin ETF applications in the USA sitting in front of the SEC waiting for approval from some of the biggest, most serious companies in the investing world. We're talking Fidelity, we're talking ARK, we're talking the New York Digital Investment Group, Morgan Stanley. It's incredible. Van Eck. Amazing applicants here trying to get the Bitcoin ETF pushed forward. It's a question of when, not if it happens. And when that happens, whether it be in a few weeks, a few months, or maybe even next year. I'm still hopeful for 2021, but hey, the SEC has disappointed many times before. Could be 2022. If it's 2022 and we have to wait another 12 months, so be it. Because here is the likely result of what's going to happen when a Bitcoin ETF gets approved. Incredible floods of money coming into the market. And as with the price of gold, you can see here, after that 7-year bull market rally, we had a drop in the price of gold, but it was still 3 times higher than before the ETF was approved. I think we're going to see something happening similar for Bitcoin, where we're going to have an incredible rally for Bitcoin, and we might see a 6-digit Bitcoin, or at the very least, about $50,000 Bitcoin becoming the floor for the next bear market, right? This is a very, very bullish indicator for how money moves into markets. So this is, I think, a good thing for us as Bitcoin investors to be keeping an eye on. And you, of course, hear a lot of people saying, oh, but that's gold, Lark. Come on, man. Come on. What about, it's Bitcoin, just so volatile. Well, you know what else has been volatile? Well, basically everything's been volatile. It just depends on your time frames. Yeah, I know crypto can be really volatile really quickly, including Bitcoin, which lost 50% of its market cap in about a month's time. But volatility is nothing new to investing. Let me present you with Amazon. So this is an Amazon chart going right back to the dot-com era, right? So this is the run-up of the dot-com boom, then the dot-com bust afterwards. Amazon lost 95%. 95% Incredible, right? Bitcoin, of course, has done the same thing. In fact, Bitcoin's had multiple dramatic, massive downturns. And look at the Amazon charts here. When was the right time to buy Amazon? Every single dip. When was the right time to sell Amazon? Basically, never. You could argue now might not be a bad time, but essentially, during all of this time, the dip buyers were incredibly rewarded. Look at this. This is absolutely incredible stuff. Now, I know we're talking about a bigger time span here, but you have to understand as technology is accelerating, the adoption curves are moving faster, the market adoption is moving faster. So while it took, the internet and a lot of the internet companies much longer to get these kind of massive gains in and go through these incredibly big cycles, Bitcoin's moving faster because it's newer technology that's building on the shoulders of all of that old technology. So much in the same way that every dip for Amazon should have been bought, every dip for Bitcoin should be bought. You can backdate that from here right back through. Every Bitcoin, major Bitcoin dip, you buy it. You buy it. And if you look forward, I highly, highly suspect that, let's say the year's 2030, and we could be looking at these same charts, but someone's going to be talking about Bitcoin. We're going to look back and go, yep, every single Bitcoin dip for the last 10 years was a time to buy and hold Bitcoin. Much in the same way that Amazon was. Crypto is going through a similar adoption cycle as we've seen playing out with tech stocks. By the way, every single week my team and I make Wealth Mastery. It's an investor report for crypto investors. Every single issue, you're going to get a deep dive altcoin report, the latest token sales, the latest airdrops, deep dive technical analysis on the markets, a trending coin report, an interview with an industry leader, and a step-by-step decentralized finance tutorial looking at a new platform every week where you can earn incredible APYs. All of that for less than $10 a week. Click on the link down below me here in the description where you can learn more about Wealth Mastery and get started today. Next, let's talk about internet adoption rates. And this particular chart here shows that we are witnessing the fastest rate of adoption of any technology in history. Incredible. Incredible. That's Bitcoin, guys. That's Bitcoin. That's what's happening right now with Bitcoin. This is incredible. So the white line here, total global internet users, 92 to 2006. So that is across a similar time frame, but of course we are taking it from a different starting year for Bitcoin, but that gives you an idea, right, of how long it took the internet to reach 1 billion users. Crypto moving much, much faster. We are seeing an incredible influx of users. Again, because we're building on the shoulders of giants here. We're able to do these things. We're able to move so much faster in terms of adoption with cryptocurrencies because we already have the internet. We already have massive smartphone adoption. We already have people who are familiar with using all these different social media platforms and internet protocols. And when we start introducing cryptocurrency technology, it just makes sense for a lot of people. You can do borrowing, you can do lending, you can do international transfers for a fraction of the price of those rapacious middlemen like Western Union. You can store your wealth digitally. We have an entire generation of internet natives, the millennials, younger generations. They grew up on the internet. They understand digital value transfer, all of this stuff. Very, very exciting to see how fast this technology adoption curve is moving. Wild stuff. Zoom out, right? We're investors, not gamblers, right? My channel, and I hope a lot of you guys out there, we're not into gambling, right? This is about investing. The numbers don't stack up very well for the gamblers in any market, whether we talk about stocks or whether we talk about crypto or anything else. The people who make the real money, The real money, the big money, most consistently are the investors, not the gamblers. You buy a little bit of Bitcoin every week, you buy a little bit of Ethereum every week, maybe you got a couple other top coins that you're adding to your stack. You take the long-term view. Where is this stuff going to be in 10 years? Is Bitcoin going to get up to the market cap of gold? I think that it is. Is Ethereum going to be a multi-trillion-dollar market cap cryptocurrency? I think it is. Chainlink going to a couple $100 billion market cap, the oracle of everything? Sure, why not? We are early in investing in this technology. And if we want to speak about adoption and being early, well, let's have a look at this chart here, which shows the diffusion of innovation. So, obviously, Bitcoin, we've all been talking about a lot recently, and the media's been picking up on it and all that stuff. But you have to realize, according to even the most optimistic statistics from the most limited surveys, which you can definitely question their numbers, I think in terms of their upside, we are massively underweight in terms of adoption for cryptocurrencies. So here you can see 55 out of 100 Americans own stocks, 14 out of 100 currently own crypto. It's a pretty damn big difference. And just 1.3 out of 100 humans on planet Earth own crypto. It's pretty incredible. Yet we have 10 billion mobile phones on the planet for the 7 billion inhabitants, meaning that most people everywhere have access to mobile phones, which means they have access to the internet. That means we've got a lot of people still who are going to come into these markets. And it's not about, okay, they're going to come buy Bitcoin, pump our bags up. It's like, this is literally talking about the adoption of one of the most revolutionary technologies of our lifetimes. We've witnessed something that hasn't happened in hundreds of years. An entire new asset class has been birthed into existence. Most people still think it's a frickin' scam, or they're simply never going to want to invest in it. Some people still don't invest in stocks and stuff, and there's people who just don't have the money to do that. I understand, right? There's a reason why 45 out of 100 Americans don't own stocks, because they can't afford to buy stocks. But we are entering a very exciting new financial era. Bitcoin is the tip of that spear. Everything coming behind that, decentralized finance, NFTs, stablecoins, all that crazy stuff. We're early. We are early. And I know it doesn't feel like it sometimes. You've just seen the market peaking out. Now it's come down, and you bought at $65,000, and maybe you sold for a loss at $30,000. Maybe you're still holding on, but it's hard. It's painful. What the heck have I invested in? Why did I buy this? I'm an idiot. Think about where we are on the adoption curve. Again, we're talking about investing, not day gambling. Investing, not day gambling. We are so early, guys. We are so early. One in 100 people globally own Bitcoin. That puts anyone using cryptocurrencies right now in the early innovator stage. That means market share-wise, we have a long way to go for these technologies to continue to roll out and gain in value moving forward. Obviously, the technology is being diffused, different rates across different countries. We're seeing much higher level rates of adoption in places like the United States, but we're also seeing an incredible amount of interest from the non-Western economies, right? Nigeria, really big into crypto, for example. We're seeing the adoption in El Salvador. The Argentinians are big into crypto, and on it goes. We're seeing adoption happening everywhere at uneven rates, yes, but we're seeing a lot of people coming into the market. So if you were to look and take the statistic for 14 out of 100 owning crypto in the United States, for example, that would put us right about here. So we're about to go from the early adopter phase into the early majority phase, which, might I add, is the phase where we see the most market share growth happening, right? So that's where we're going to see the big gains coming in. That, to my mind, that's the 2020s. That's the 2020s. That's what we're going to see happening this decade, is we're going to actually be moving in to the early adopter and then into the early majority phase. Again, it's going to spread out differently across different countries, but I think that by the end of the decade, then we'll start talking about the late majority entering. There will still be some higher room for the market to go, but by this point, the point that most of the late majority, and of course the laggards, start getting in, most of the financial opportunity is gone. Look, there's always going to be new things, always going to be new altcoins coming out to get super rich on. But if you want to talk about being early, you're still pretty early right now. It's not going to be like that forever. You're not always going to be early. There will come a time later this decade when you're kind of late. But that's not now. That's not now. I think that's important to recognize. Now, all those adoption numbers, by the way, they're all quite weighted toward younger investors. A recent survey out of the United Kingdom showed that 45%, this is incredible, 45% of young investors, their first ever investment, Bitcoin or cryptocurrencies. Wowzers, that's incredible. So nearly half of the youth in the UK, the first investment they ever bought in their life was cryptocurrencies. That is an impressive statistic because you have to remember the millennials are about to inherit $68 trillion over the next 2 decades. Approximately $32 trillion of that will be inherited by the end of this decade. There's about to be a massive wealth transfer, and we have a lot of young investors who, again, are internet natives. They understand the idea of having unique digital value with an NFT, storing your wealth in Bitcoin, sending a stablecoin transfer, doing some borrowing and lending on Aave, whatever it might be. They're savvy, they're with it, they know what's going on. And of course, it's no wonder that we have stories like this one that you see on the screen here. So we had Barclays and Santander, both UK-based banks, blocking payments to BINANCE last week. Banks have a long history of blocking people's access to buy and sell cryptocurrencies. It's been going on for a long time. Obviously, banks don't want you to buy Bitcoin, to use DeFi, to send a stablecoin transfer, because software, it's an extinction level crisis event for banks. The Bitcoin software, the Ethereum software, the stablecoin contracts, all this stuff. We don't need the banks anymore. It's such a wild situation. And again, we're still early because we need things like being able to be paid in cryptocurrencies. We just did a story last week about how a bill is being proposed in Argentina to let people be paid legally, be paid their salaries in Bitcoin or any other cryptocurrency, I guess. Probably just going to be Bitcoin, maybe stablecoin, something like that. But game-changing stuff here. Imagine when you can actually start receiving your weekly salary paid out. Let's say 50% in Bitcoin and 50% in USDC stablecoins, which you can then tank and, put into some decentralized finance or something like that. Why would you ever use a bank ever again? There's literally no reason. Terrible rates. They're super restrictive. Oh, you're not allowed to spend your money there, son. Think about this. Barclays, Santander telling you you're not allowed to buy cryptocurrencies on Binance, but you can take your entire life savings, go down to the casino, go down to the lottery, go down to the horses, whatever, and they're not going to stop you. But if you want to buy Bitcoin, no, they're going to stop you because it's a threat to their business model. You going to the casino and going broke, that's not a threat to their business model. That's part of their business model. But we won't see every bank resisting this. Some banks are getting on board. They will not go quietly into the night. They will not be blockbustered. This year, the New York Digital Investment Group has secured, so far anyway, 5 partnerships that are completely game-changing. These partnerships mean that almost any bank or credit union in the USA can offer Bitcoin to their clients. They can sell it to them, they can buy it back from them, and they can custody it for them. Game-changing, beyond belief. Currently, there's $17 trillion sitting in US deposit accounts, earning basically no interest. These connections are a big deal. These partnerships are a big deal. And look, they haven't paid off yet. But the fact that the New York Digital Investment Group is laying this foundation, putting this groundwork in, this is big. This is really, really big. Again, look around the corner. Think what's coming next, not what's happening right now, not what's happening tomorrow. As an investor, think about what's happening in a year's time. Think about what's happening in 5 years' time. There's that old saying that most people overestimate what they can do in a year, but underestimate what they can accomplish in 5 years. That's investing. That's investing. My biggest gains by being involved in the cryptocurrency industry have been through getting in early, taking profits on the way up, moving money around, getting back into USDC, back into Bitcoin, all that stuff. It's how the game works. And there's a lot of money that's about to come into the market. Also, we have to understand there's a lot more money out there beyond just deposit accounts. Publicly traded companies have around $10 trillion in cash reserves globally. If we take it out to private companies and hedge funds and endowments and all these other things, family offices, et cetera, tens of trillions. Now, of the 10 trillion, just to give you an idea, again, how early we are, of the 10 trillion in cash reserves globally being held by publicly traded companies, that's cash, which, by the way, is being inflated into oblivion. Of that 10 trillion, only around 6 billion has been invested into Bitcoin. That's just 0.06% of the money held by publicly traded companies, which has come into the Bitcoin markets. Incredible, right? That's crazy stuff. That means there's a lot more money to come in. Now, I'm not saying 100% of that money is going to go into Bitcoin. Obviously, it's not, but maybe that gets up to a single digit percentage, 3%, 4%. Are we going to see $300 billion coming into the crypto markets from these publicly traded companies? We're seeing more and more companies get on board all the time. We haven't had any super big mega companies like Tesla announcing for quite a while, but the likelihood that we're going to see someone like Apple or Facebook or Google or Microsoft, whoever, make an announcement at some point in the next couple years is pretty big. That money's coming. Again, we're early. There's around 41,000 publicly traded companies, and of those, less than 24 have taken positions in Bitcoin. And all of them are sitting on a melting ice cube of dirty fiat. And yet, we have this story here. 40% of institutional investors intend to buy a lot more crypto. They're going to get Bitcoin. They're going to buy Ethereum. They're going to start using stable coins. We had a story just a few days ago that Aave, one of the biggest decentralized finance protocols, they've launched an institutional investor playground, basically, where you're going to start seeing hedge funds and stuff bringing their dollars in to these protocols because they don't even have to invest in Bitcoin or invest in Ethereum. They will, but they can also bring dollars in and just earn dramatically higher rates than they're going to earn with bonds, dramatically higher rates than they're going to earn sitting, of course, in deposit accounts. We're going to see a big flood of money coming in here. Numbers speak for themselves. Less than 24 companies. Of course, we have a lot more institutional investors, right? The hedge funds and stuff, and dozens of hedge funds at this point, but still a fraction of the total amount of hedge fund money, of family office money has come in. This 24 out of 41,000 number is pretty representative, I think, of what you're going to see across the board with different institutional players, different family offices, et cetera, Most of these organizations are still not on board. They're still on zero. Long story short, actually, it has been a long story, but here's the final point. We're still early. That's kind of the main point. I've already been saying that, but it's important to drive that point home. And I know right now, with the markets down 50%, some of your altcoins are going to be down 70, 80%. You probably don't feel like you're early. You probably feel like you're late. You probably feel like you're an idiot. What did I do with my money? How am I going to explain this one to the wife? I know. I've been there. But what's kept me in the market, what's kept me so positive all the time, some people say, Lark, you're too bullish all the time. I'm bullish all the time because I understand what I'm investing in. It's such an important thing to realize. I know what this technology is. I know what Bitcoin is. I know what Ethereum is. I know what the potential of this technology is. Sure, there's all kinds of short-term noise. We talk about that all the time here. But if you want to actually understand what you're investing in, actually understand the big potential implications, what we've talked about in this video, I hope will give you some indication of what's coming, of how big this is going to go, and of how early we still are. And if you believe, like I do, that the future of money, of value transfer, of value creation, of digital scarcity, of value storage, all that stuff, if you believe that it's digital as we go into the digital age, then you should still be super bullish on Bitcoin and cryptocurrencies. Anyway, those, of course, are just my 2 Satoshis. What do you think? What do you think about my main thesis of this video here? Do you think we're still early enough for it to be a great investment still? Or do you think, well, you know, maybe it's kind of early-ish, but realistically, anybody buying crypto today, it's pretty late and you're just going to lose all your money? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.